Hi, and welcome to the Access Direct Opening Bell, your essential pre-market podcast. In just minutes, get key global updates, overnight trends, and market-moving factors that set the tone for the day. Whether you're a seasoned trader or just someone tracking the markets, this is your go-to briefing to stay ahead at all times. So let's dive straight in. Good morning. It is Thursday, and we will kick off with US stocks, which rose on Wednesday as traders prepared for President Trump's tariff announcements with the hope that the measures will be contained. The S&P 500 ended 0.7% higher and the Nasdaq 100 gained 0.8%. However, the reaction this morning has been the exact opposite, with index futures tumbling more than 3% as the announcements have fanned fears of a full-blown global trade war. A minimum of 10% tariffs on all exports to the US and additional duties on 60 countries will be applied starting midnight Saturday. Meanwhile, China was slapped with tariffs of 34% while India was set at 26%. In other markets, the VIX fell last night, but overnight futures were up around 15% this morning. The dollar fell a little while the 10-year treasury yield dropped. Bitcoin ended nearly 3% down. Gold rose to a new record of $3,167 an ounce on the risk-off mood, while oil was down 2.7% this morning after rallying yesterday. Coming home, the rupee fell ahead of the tariff announcements. Bonds gained the most in 2 years, though, on RBI's new bond buying plan, with the 10-year yield falling over 10 basis points to settle at 6.48%. Meanwhile, the central bank named Poonam Gupta, a former World Bank economist, as its new deputy governor. On to domestic stocks, and the Nifty rose 167 points to settle at 23,332, while the India VIX fell 0.06 points. The NSE 500, small cap and mid cap indexes all gained and outperformed the Nifty on the day. All of the 12 NSE sectors rose, with realty gaining 3.6% and energy rallying 0.5%. Breadth for the NSE 500 was firmly positive, with nearly 80% of its constituents advancing. The best and worst performers in the Nifty were Tata Consumer Products, which rose 7.1%, and Bharat Electronics, which dropped 3.3%. Markets are expected to open weak given the decline in US futures and Asian equities. So watch out for first support in the 23,090 to 23,141 zone and the next downside extension near 22,800 and 22,900. Resistance lies near 23,420 followed by 23,566. To reiterate what we said yesterday, critical downside levels for the small and mid-cap indexes lie at 15,664 and 49,812 respectively. Coming to flows, provisional data showed that foreigners withdrew 1,539 crores yesterday. The month-to-date outflow now stands at 7,440 crores. On to derivatives, and the Nifty's put call ratio went from 0.76 to 0.96. While that of the Bank Nifty went from 0.87 to 0.94. Nifty puts added were greater than the addition seen in calls, and implied volatility rose 20 basis points, which meant that on a net basis, people bought protection. Looking at options concentration for the weekly contract that expires today, the trackable range sits inside 23,000 to 23,500, with notable additions seen at the 23,000 and the 23,200 put strikes, and the 23,300 call strike. For the same expiration, near at-the-money puts became more expensive compared to similar distance calls, which means volatility traders turned bearish for the upcoming session. Speaking net index options activity, foreigners and proprietary traders turned bullish, while retail investors flipped to bearish. Elsewhere, foreigners' net shorts in index futures fell 4,000 contracts to around 62,000 contracts, which showed a drop in bearish bets. Looking forward to today's session, the GIFT Nifty was down 370 points at the open. Asian markets were down nearly 3% each, along with the slide in US futures. Coming to stocks, Federal Bank, HDFC Bank and Hindalco were at horizontal support, while Devyani, IRCTC and Karur Vaishya were at horizontal resistance. Blue Star, Chemplasts and J&K Bank were at trendline support, while Concor and Jubilant Foods were at trendline resistance. Talking breadth, 57%, 31% and 23% of stocks in the NSE 500 were above their 50, 100 and 200-day averages. That is a wrap on the day's podcast. Please note that this podcast serves solely for informational purposes and should not be considered financial advice of any kind. For a comprehensive disclaimer, please visit our website Thank you, and we will see you tomorrow at the same hour. Good day and take care.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.